Welcome to Past Signals and Future Moves, my usual weekly market update. This time what I've done is I've done a very detailed weekly review, and you can see that in my YouTube post. So I'll briefly touch upon the closing week. The other important data this week was the mutual fund inflow release. I've also done a detailed post on that. So please do read those two after you listen to this video. Well, the week gone by was a good week because it showed two things. It showed the resilience of Brent crude to geopolitical hikes, and at the same time, it showed the resilience of the Indian market to any geopolitical hike, though, of course, it's related to the resilience of crude. So if you see the week gone by, the Nifty was flattish, slightly negative, but the mid cap, small cap, and micro cap indices all outperformed the large cap with fairly decent performance of 1.5 to 2%. The FIs were net positive this week at 4,000 crores, and DIs double of that at 8,000 crores. So despite that the Nifty was slightly negative, you can probably see that this was probably a bit of short covering on specific stocks by the FIS, which probably led to the positivity. The mutual fund inflows also came in very strongly at a 25% increase over the month of May, with the SIP book almost 1,000 crores more. And if you see the flows, which I've done a detailed analysis, you will see that more than 50% of the flows are meant for mid and small cap stocks, which partly explains the rally in the last week, and also indicates that in the coming weeks also mid and small cap should get strong buying support from domestic investors. The advanced decline ratios during the week were also strong, which meant that the needy, that is the non-institutional domestic investors, also played a role in bouncing back from the geopolitical spike on Wednesday. The other thing which gave a positive flag to the market was the TCS results, which was in line. Again, I've done a detailed coverage already, but the inline and the AI tilt, I think, gave a positive value-based buying. And for the coming week, we are seeing a lot more IT majors lining up to post their results, and that will give fresh direction to the IT. The progress of the monsoon news was also good, seemingly covering the whole of India, though the long-term view of the monsoon still remains below long-term average. I think for the time being, the sowing should be good of the Kharif crop, and hence interest rate pressures have eased in terms of RBI's next policy. So you saw that realty and consumer durables and PSU banks did well this week. Auto and FMCG suffered as sectors this week because I think the full impact of the oil price being high from March, April, and May, the 3 full months, would see in the margins, and a little bit of profit booking is there in that, as well as in the defense space. For the week forward, the important thing to look out for is I think a lot of IT majors are going to post results. That's important, and a few other companies. So result season has started in full swing. Inflation data will also be released on both CPI and WPI during the week, and that's also important from an RBI policy expectation outlook. Right. Apart from that, we are seeing that oil has been resilient to the geopolitical escalation. It spiked from 72 to 78 by Wednesday, but has reached back to 76. But over the weekend, there have been parallelly de-escalation efforts, but as well as increase. I think about 140 locations in Iran have been attacked by America, and there's been counterattacks. So we need to wait and see whether the Brent crude holds its resilience, because that could have a significant play on the Indian outlook. That apart, I think the mutual fund inflows have given a very good indication of mid and small cap flows being dominating the mutual fund inflows and the spike. So I think that should mean that fund managers do have enough firepower in their hands to support the market from any volatility. That being said, with the earnings season just starting, I don't think that there is anything big negative that can happen, and because DIs will wait and watch for the right sectors to deploy the cash. So a little bit of nervousness and uncertainty may be there, but do not panic and continue your systematic allocations, because as earnings plays out, domestic finance will step back in and buy strongly where they will see good guidance, because this quarter, on a quarter-on-quarter basis, is honestly not expected to be good, especially for crude oil related sectors. Though those who are insulated from there will probably be the banks, which reported good business results, and the EPS and the names and all of that we'll get to know this week. So look forward to my next update.